Hello, hello, hello. Can you hear me? I think yes. Sorry for that, I was muted. Alright, so we do have some news later on. So I think I will wait for the news to be released and then I will see if there is any opportunities at 10 a.m. Um, and yeah, we will see, we will go from that. So what we can see, let's start with the weekly time frame. So the monthly time frame obviously did sweep the previous monthly high, which is the buy side liquidity, and now is pushing down. Now on the weekly time frame, you can see that price did create a strong bullish candle, which is the potential range we're trading in. Now what price did last week is that price did go to the 50% of the range of the candle that was from the 9th of June. Hello? Uh, can you hear me better? Or should I just lower the volume of the music? Is it better now? Or I should, what should I do? Lower the music or just up my voice volume? Alright, that should be better. So what we can see on the weekly time frame is that the previous week did close as a bearish one inside the range which we were trading of that candle, which did closed at, which started from 9th of June. So there is multiple things that can happen because with all the tensions in the world that is happening right now with with the Iran, Israel, US. So that is bullish for, obviously that is bullish for gold, which is a safe haven asset. When there is some tensions around the world, then the safe haven assets going up and the riskier assets going down, right? So the price action is telling me that price can easily come back to the 3,280 levels now. And on the other hand is that price did already touch the 50% of the range, and now price is touching this level right here, which is a potential support on the weekly time frame. Now on the daily time frame, you can see how price does react did reject that level and then push to the upside and sweeping the buy side liquidity. Now price already did sweep the current daily previous daily high, and you know price did sweep the buy side liquidity, which means that price can easily go down. So for a potential sell side liquidity. Now again, as you can see that price is inside this current range, and what I would expect to do for a price with the current price action is that I want to see if price can go to the upside and sweep the buy side liquidity. So what I'm gonna do now is I will wait and see how price does set up for a 10 a.m. candle. So the current range the price is trading is here. So this is a CRT low and this is a CRT high. So this is a CRT high. Now we have a 50% of that candle right here, which we already did touch. So at this point, price can easily, go to the downside and sweep the sell side liquidity from the downside. Why? Because price already touched the 50% of the range. Now the daily also did sweep the previous day high, which is right here, and also price did sweep the buy side liquidity from Thursday's candle high. So with the fact that the previous weekly candle closes a strong bearish candle inside the range, so it's price can, can go to the downside. Now I will wait for the price to set up before the 10 a.m. and I want to see how the price how the news will react, how the price, I mean, will react on the news. So I'm just gonna wait now. So at this point, I would expect for price to go to the opposing side of the range, to the buy side liquidity, because we had already moved to the upside in Asian session, um, and then with everything that happened with the news. For now, yes. I mean, there was a potential entry from this order block, which was from the London session, but because I'm not expecting for price to go down, I expect for price to go up. So it's just about the entry, right? So for now, yes, because I said we have a news at a 9 a.m. Uh, I mean 9:45, so it's like in 45 minutes. I'm not saying that price cannot go to the upside in at that time, but I will wait. I want to wait for price either sweep this buy side liquidity and then look for sells, or I'm just gonna wait for a 10 a.m. candle and see if there is any entries. So because you see the price did actually touch the potential support area on the weekly time frame. Now on the daily time frame, as you can see that the previous daily candle on Friday, what it did close inside the range, right? And today's candle pushed to the opposing side of the range, which is this doji candle. This was the range price we're trading in. So the now buy side liquidity is swept and the high is made. So I just want to see if there is any potential possibility for price to go up to retest that high, right? So I'm just gonna wait. So by the way, can you hear me good? Does my volume sounds good, or I need to up my voice volume or lower down the music? And can you hear me? I mean, can you hear the music? No, there is no trade for me now. Well, I mean, the good trade was at a Asian session with with this candle right here. As you can see that we have created a range, which is the 4-hour candle. Now we also on the 4-hour candle have a order block, which is a model 1 right here. So this is a 4-hour order block after a sell side liquidity that is swept right here. Then obviously on the 4-hour time frame you can see that price moved to the upside and validated this order block. Now price did create this CRT candle, and at a Asian session price touched the order block and swept the sell side liquidity. 33556, 33556. Well, so you had a buy at a 3,356, 3,356. If you have bought inside this area, then you are that was very good, because we had an inversion fair value gap right here. So this was an inversion fair value gap right here, which price did validate right here. So your entry could have been with right here with the stop loss down below. Why? Because we also have this candle right here, which is the last candle that swept the sell side liquidity. So from this area there was a good bias right here. So from inversion fair value gap with a stop loss down below the low, and aiming at a 50% of the range first, which is a 2.5 hour trade, and then eventually up to you if you go break even or you just close the full position right here. So that was pretty much it, the trade, and this was pretty good trade. So I wasn't trading, I'm not trading the London session, as I don't have time for it for now. So that was a very good trade with everything. So everything what you needed, you had. So you had a key level as a order block on the 4-hour candle. You took it from the crash. 3 3 right here. So right here with the current price action right here, I assume right here. Uh, if you look at it that way, then there was an order block. Oh yeah, then this what I can see is that you had an order block right here, which you can use as a entry confirmation, and eventually you can look for the higher prices, because what I would expect for price to do, I would expect for price to go to CRT high, but I would love to see how price does close above 50% of the range, or it just rejects it, because this is very important level. As you can see, price did close above it and then had its move down, very aggressive. So this most likely was a pullback before the, because we had no, we had no news. So news is to come. So this was just a retracement before the move up. I'm sorry, 1 second. Where should I hold my trade till? Well, now obviously I would hold the trade until the buy side liquidity right here. So I think that prices may come to this buy side liquidity, because or you can so I just don't know what was your stop loss and how you manage your trade, but if you enter right here, so your stop loss must be below the either this low or below this order block, so that is up to you. So I would secure something obviously at a 50% of the range, so it would be right here at a 3,373. I would secure something there and then leave it to this buy side liquidity, which is right here, this high, Then if price does that, obviously you go break even and then just leave your TP until the CRT high. So that's how I would manage my trade. So that is pretty much it, and obviously price can just move without me, and the 10 a.m. just will be a expansion candle, and it will push to the upside, but it is what it is. And I just, because for me what I want to do is I want to buy at the low of the range and then sell at the high of the range. Okay, so that's how I trade, and if I don't get the trade at the low of the range, then I would probably miss the trade. What? Uh, the price is 3,373. Your buy is good because it has an idea. As I said, that as you can see that looking at a, so I will explain you one more time. So looking at a daily time frame, you can see that this doji candle on the daily time frame, right? Wait a second. So So this candle right here, which is doji bullish candle, that is the Thursday 19th candle, right? So as you can see on Friday, did price did the sweep the sell side liquidity and then push to the upside. Now the current daily candle did sweep the high of that candle, and what it did, it created the new high, right? Now looking on the 4-hour time frame right here is that price did sweep sell side liquidity right here. Now price did create this candle, this bearish one. This was an order block on the 4-hour candle because we had an expansion to the upside. Now after price came back today in Asian session with this 4-hour candle, the large one, you had a sell side liquidity and buy side liquidity, which is CRT high and CRT low. Now price did sweep that in the Asian session where you had an amazing buys to the upside, and eventually now what price did with the current 4-hour candle did, it just came down to retest the lows one more time before going up for this a buy side liquidity. Now I'm not saying that it will be 100% right, but most of the times it does that. So if your 4-hour time frame, which is your higher time frame, suggests you to look for buys and you know, the price did everything for you to look for the buys, at least to this high right here, which is 3,394. So uh, also, where your buy could have been executed with the lowered stop loss, which is right here with this candle. As you can see, when this candle did go to the downside, now you go to the lower time frame, such as a 5 minutes, or even like, you know, 4 minutes or 3 minutes. On the 3 minutes, there is a clear pattern that is price did create the low right here, which is a sell side liquidity, which is a sell side liquidity. Now price broke that, pushed to the downside, touched the 4-hour order block once more time. This is a 4-hour order block, this line right here. So as you can see, this is the order block. Price came to this order block one more time, and then from here you can see that price did create what? Order block on the lower time frame, with this candle confirming it. So your long could have been executed right here as well, with the stop loss down below this order block, and you're probably looking for a, again, for this 50% right here, and then eventually you look for this buy side liquidity, equal highs, and then you look for a CRT high, and this is a 1 to 10 risk to reward. So this is how you manage your risk on the lower time frame. So this would be your 2 to 2.7 hour trade. So but if you entered from this 15-minute order block, then obviously your stop loss has to be a little bit bigger. So it's like 60 pips, and you would be now only 1.7 R, and then eventually you have 2.4 R at the 50%, and then at the high of the range, right here you have a 3.8 R, and then you here have a 6 R trade. So so this is a 4-hour OB. This is for OB. So we have on the right, and yep, this is it. So Fire Lord, you got what I meant by everything I explained, because it's very important to understand why you took this trade. And you have, you know, before you enter your trade, you have to have a exit plan, you have to have a take profit, you know, levels, everything you have to have before you enter the trade. So this is very important. Whenever you trade a candle range theory, then at that point you just place the trade. For example, you take the trade right here, right at this point. You take the trade, and you don't close your trade until it hits your 2R, which is right here. That was your 2R. You see, whenever there is a 2R prior to the 50%, I will secure most of my position, right? Because 1 to 2R is very good result. Now, if price do not has a 2R prior to my 50%, then I will just leave at the 50% and I will wait for price to come to the 50% or take me out, because whenever I take the trade, then I understand that most of the times whenever I enter the trade from the, if it is correct trade, right? If it's correct trade, then most of the times price will go to the 50% of the range, and then eventually price go to the opposing side of the range. So this is very important to understand that, just hold the trade, okay? And so well, yes, I'm working on that. It just I will be opening my community sometime, and I'm working on it on the full course that is will help you understand everything, and with all the explanations. And yeah, I think that it will be good one. So I will do that for sure. It just I need some times, because I want to have a proper community first, because it's very hard to for example, I would open the community now, so you will join alone and you will be alone there, and obviously that after some people will join once again, I will have to, I will have to explain one more time and again and again and again. So I want to, I want to have some more people in community, so I can take some more people at once, and obviously. Whenever I will finish the course, then I will do that. But so what I basically do is I do trade the 4 hour ranges. So all my trading based on the 4 hour ranges, and what I do is I wait for, and before I'm looking at the charts at the start of the session, I'm looking, do I have a clean range to trade? Do I have one, or I need to wait for price to create one? If I have one, then obviously I will trade that day. If I don't, then um, that's going to be hard for me to take any trades, because what I wait for the 4 hour range, and then I wait for price to sweep either the uh, low of the range or the high of the range, and then I take the trade. So obviously, the daily time frame also important, because you have liquidity at a previous day high. You have a 3 days of the liquidity. For example, you have the Friday, Thursday, and Wednesday. You can use all of them as your liquidity points, because they're all valid. So for example, tomorrow I could use the Mondays, Fridays, and Thursdays candle as a the liquidity. Okay. Also, we have the weekly liquidity, so you just plot them. So basically, for the CRT, you don't need the daily bias, okay? So you only go with the liquidity and the ranges. So you look for the range at a key levels, and you just wait for a low or high of the range to be swept, and you just take the trade to the opposing side of the range. Obviously, if you have the entry confirmation. So today we have the range, which price did sweep the low. We have the key level, and price is still inside this range. So until price does close below it, or invalidates it, then I'm not looking for the trade. But price did close inside the range, and now I'm waiting for price to see if it can reach the opposing side of the range, which I would like to see. Now if price does sweep the opposing side of the range, I'm looking for sales at that point. If price does provide me uh, the 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 correct confirmation of trade of MI entry, right? And then I will look for that if the price is setting up for the sales. If price does not setting up for the sales and it continues to pushing up, then obviously I'm just gonna wait. Okay. So right now I'm expecting for price to go to the upside, to the CRT high, or a buy side liquidity. So if you took when you know when you took the trade right here, then obviously it is a good trade, and you just hold it, because obviously you had an inversion fair value gap right here, which is very very strong PDRA for a potential entry confirmation. And after price did close right here at above the inversion fair value gap, at that point this is inversion fair value gap is validated, and you can choose, either you put your stop loss below here as your stop loss, or you go below the inversion fair value gap, and your risk to reward is very very different. And but this is more riskier, because price obviously can go lower, and but you're not expecting for price to go lower, right? Because your higher time frame tells you that you are bullish. So this is pretty much it. Now the 4 hour looking good for continuing up. Now we have news in 12 minutes. So let's see how price does the news help price to go up. And then I will be missing the trade, and I'm not gonna take a trade today, because for me to take the trade now, price would have to um, come back to this to the 4 hour order block, now create some entry confirmation, and then for potential upside move. Now if price, or for the sales, price has to go to the upside, and this is a uh, you know around 200 pips. So This is a 200 pips, and I don't think that the news will help push to for price to 200 pips. In case if we get any news from US, that would be the catalyst for price to move push to the upside. But this trade is looking good, as you can see, 50%. Now price is closing above the 50%. So if you have taken the trade, this is where I would close my first. That would be my first take profit, and yeah, just leave the trade to the opposing side of the range, and nothing you can do. Obviously, you can secure some of these high as well, which is a buy side liquidity. This equal high on the 5-minute time frame. You can see here I would secure some more, and then obviously I would put my stop loss to break even and wait for price to reach the opposing side of the range. So this is pretty much it. So if you took those buys, they were good. They were good. I approve. Obviously, you don't need my approval to take the trade, right? But that was a good buy. If I would, because it is what it is. I just didn't pay attention. I was setting up my stream, and so I didn't look at a charts. So if you have any questions, feel free to ask. I will answer you, and I will help you with any of your questions. There will be a Discord or a Slack group. I did not decide it yet, but I think it will be the Discord. So yeah, I think it will be the Discord. Telegram is for free, and Instagram also for free. I do post my trade breakdowns and all that stuff for free. But as I spending my time to create the complete course, what I do and how I do, so I spend a lot of time for that, and I do not finish it yet. So whenever it is finished, then I will probably most likely open the Discord group. So, but you can ask the questions now. That this is everything for free at the moment. So so as you can see that your trade is running to the 50% and eventually running up to the upside. So this was a very very clean trade. As I said, that I am expecting for price to move to the upside. Now we have a sell side swept. We have touched the key level, and we have touched the key level one more time. So price is moving up to the upside. So this was an amazing trade. Obviously, maybe sometime later on, I will, whenever I will open my Discord group, I will most likely either do a live sessions for London session, or I will just do breakdowns for London session. We will see. No problem. this is all you take the trade by yourself, so that was amazing. I mean, it's good. You did great, right? Because you entered the position without me saying for you to enter, right? So this is most important thing you can do. uh, Very important thing in trading is that you have to take trades without somebody saying you to do that, okay? So even if I look for example buys, or and you look for yeah, sure. So uh let's begin with the daily, okay? So let's begin with the daily time frame. Now you can see that on the daily price on so let's go on the weekly. So you can see that the weekly candle, the previous weekly candle, did come to the downside and touch the potential support area right here at a 3356. This is the potential support area. Now uh, on the daily time frame, how price does support that idea is that, as you can see, if you look on the daily time frame now, the Thursday's candle on 19th of June did create a range for you. So this was your CRT high and this was your CRT low. So this was your 30 high and this was your 30 low. Now on Friday, what price did is price did sweep this sell side liquidity from the daily low and push to the upside and closed inside the range. So what you would expect for the current daily candle on Monday, today, 23rd of June, is that price will most likely go to the downside, touch the bullish PD array, which is in my case is 4-hour order block, and then eventually go to the upside of the previous day candle, which is buy side liquidity from the Thursday 19th of June. So when we clear that, we now have a bias to the upside. Now if you go on the 4-hour time frame, you can see that this was a sell side liquidity. Now after price did sweep the sell side liquidity, price moved to the upside, price expanded to the upside. Now what price created later on is price created the order block on the 4-hour time frame. Now in Asian session, what price did create a high and then push to the downside, and at that time price did create the range. So this is a CRT high. So this is a CRT high and this is a CRT low. This is a CRT low. So now you have the range to trade, okay? This is your 4-hour candle from Asian session, which you are going to trade from the point price did sweep the sell side liquidity, touch the order block on the 4-hour time frame and the daily supporting your bias to the upside, because you know that previous day candle closed inside the range, so most likely this candle will push to the upside for opposing side of the range. Now, as the 4-hour in Asian session did create the new high, so after the retracement to the downside, the sharp pullback, okay, price then sweep the sell side liquidity or CRT low. And from this point right here, this point is your buy opportunity, and to the, as I said, 50% of the range, which is a 50% of the range right here. So this is a 50% of the range. So you would expect from this low push for price to push to the 50% of the range right here and eventually to the opposing side of the range. So what price did, obviously, if you look on the 5-minute time frame, this is what happened. Price did sweep the CRT low. As you can see, price did sweep CRT low. Now price has created a inversion fair value gap right here. So price did create that, and from very this moment, as price touches the fair value gap, you move your you place your stop loss below the low or a below the fair value gap. This is up to you. Now if you place your stop loss below here, now you aim for 50% of the range, which is right here. I just use a simple fib retracement. So this is a fib retracement. Now, okay, so I will show you my settings. So this is a simple fib retracement. So you only have to have a 0, 1, and 0.5 levels. Okay, so this is just a simple fib tool right here. So you know fib right here. And yep, so eventually you did touch the 50% of the range on the 4-hour candle, and then the 4-hour candle that was a currently running 4-hour candle, what price did is price pushed to the downside, touches the key level as a 4-hour order block once more time right here. As you can see, price touches the 4-hour order block. Now if you go on the lower time frame, as I said, such as 3 minutes, even the 5 minutes you can use. So as soon as price does touch this key level, now you have a sell side liquidity swept right here on the lower time frame, which is also very important. So you have a sell side liquidity right here, and after that price, you know, created the order block or the model 1, and you can look for an entry with this candle right here, stop loss down below the order block, and you aim for this highs right here, which is 126 risk to reward. So, or you can use the 5 minutes right here. Price also, this is the same level as the sell side. Now you have a fair value gap inversion one, and from this point right here you can look for buys as well. And yeah, so this is the news. So let's see what price does now. Very amazing, very amazing. So do you need anything else, like do you need more explanation, or you if you need more explanation you can ask freely, don't worry. Just ask me what you don't understand and I will answer you, it's okay. But this was pretty much it from me. I think that the day is done. I think I'm not gonna take any trades now. Look at this, the news pushing to the upside. Now this is where I would secure most of your position, most of my position at this highs right here, at this buy side liquidity. I would secure most of my position and just leave some of my position running to this you know, opposing side of the range. So this is fine. What do you mean by sending DM? You well, I would take sells only if price does sweep the you know, this opposing side of the range. I only at this moment I will look for sells only here. Before I'm not gonna take any sells. So price has to come to this level and sweep this buy side liquidity for me to look for sells. But as I said, the sells are going to be tricky today because the main move is to the upside today. So let's see. Let's just see how price does set up. Because you know, I don't know if price is going to sweep this sell side buy side liquidity with the current candle, and if it does that, then maybe potentially you can look for anything to the to the downside. But sure, no problem. You can do that. You can send me a private message if you want. I will try to answer your questions. No, the CRT candle is a range that price is created and price sweep. So, so if you look on the daily now, which candle is the CRT right here is not the one that sweep the sell side liquidity, but the one is the range that got swept. So not this one, not this one is CRT candle, but rather the previous one right here. This is the CRT candle. So because this price, so this candle is your range, this candle is manipulation, and this candle is distribution. Okay, so range, manipulation, distribution. So the first one is your CRT, so the range is CRT, then manipulation, and then distribution. So this is an amazing trade to the upside which you have taken. I really like this trade. Well, sometimes is very annoying because I just don't have a, because I join late, and sometimes I miss the trades, but it happens, so it's okay. So this my order block on the 4-hour time frame. Now price did touch the order block precisely, and from here price, as you can see, moved to the upside. So if you look if you look this way, so this is for example, this is your range. Okay, so this is your CRT range, so this is your CRT high, this is your CRT low. Now the next candle, what it does, it goes down, sweeps the liquidity, and closes as a manipulation candle right here. So imagine this is your manipulation candle, and the next candle, what you expect for price to do is to go to the upside after what? So go to the upside after this candle did manipulate the low. This is your CRT candle, this is manipulation, so this one is going to be distribution after price touches the PD array inside here. Inside this is your higher time frame, so on the lower time frame you will have order block or some bullish PD array right here. So this candle touches that and goes to the upside. So this is the CRT. So this one, the first candle is your CRT. Okay, so this is the candle range. This is the, because what is the candle range theory is that every single candle is the range, but you actually can't trade any, every range, because right here you can see that price did create the range, but it moved to the downside because we had the key level and sell side liquidity here. So why this candle became the CRT candle is because price did already sweep the key level as a sell side, then it becomes the proper CRT candle range which you can trade, and the next candle did manipulate, and this candle did what? Retest the low and move to the upside. There is no problem with that. I will help you with I will help you with that to learn this properly. Uh, well, yes, the fact that price can go there, but in my opinion, like today were a perfect, amazing buys to the upside. It's just that I did not take those because, that happened prior to my session. And if I would love to take a trade today, that would have been buys from down here to the upside. Now, I don't think that price will come to the CRT high right now in my session. So, because I have only 1 hour left until the session done for me. So, well, if you took your trades from the lows, then obviously you would go the break even right now because you already would have closed like most of your positions. So why would you hold your stop loss? I mean, uh, I would just go break even now. If you enter from here from the lows, then just go break even right now and forget it. Like if you have closed most of your position, then just forget about your trade because you already have one. So it just for you to see if price can reach to the upside or no. Or but as price did close above the 50% once again, then obviously the opposing side of the range is very very valid. What do you mean? So if your entry was from here, if your entry was from here, so basically your entry is somewhere here, you just go break even and that's it. And you just leave your stop loss because you already have amazing trade to the upside. So you just go break even and wait for price to either go to your break even or you look for price to reach the opposing side of the range. So that's pretty much it. So 63. I mean, you just go break even because even if you enter it right here at 63, then you had an amazing trade to the upside, which is a 3.2R or 2.6R. So you have secured already most of your position. Just go break even, my friend. Because whenever you secure the profits, just go break even. You don't go break even before securing the profits. After you have secured your profits, just go break even. Because at this point, you should have like, you know, tiny portion of your position left running, because obviously you go with the levels. Okay, when you have the buy side liquidity and price does sweep that, then obviously you need to secure some of your positions and just go break even, because you're never wrong by going break even. Okay. Yes, it is back to the 50% of the range. Why? Well, because I said secure most of your position at a this level, because this is a buy side liquidity. After you sweeping this buy side liquidity, you have to secure your your most of the position, because you don't know, maybe price will come back, because as I said, price is in the range, and when you trade the range, you have to you have to secure, because even if price is where to go up to this level, it can go lower, can retest right here and then go up to the upside. It can come back to your entry and then go to the upside, right? So sometimes it will be like, straight push to the upside. Sometimes it's going to be uh, like that, because there is, multiple types of CRT. There can be a 3 candle CRT, there can be a 2 candle CRT, there can be a multiple candle CRT. So as I'm still as I'm still looking for the higher prices, but price may come lower first before going up. So that's why I said the best thing you can do whenever price comes to this buy side liquidity is just secure some of your position, right? That's it. It's as simple as that. It is possible to add another position, obviously, because if you expect for price to go up, but I wouldn't be adding positions, in the middle of the range. Why would you add a position in the middle of the range when you had already the very good position from the low of the range? So when you could have held this trade, for opposing, well, you see, that's why you just whenever you enter, for example, if you entered from the low of the range, you just go break even, right? After you secured your positions, you just go break even just to see if price can reach the opposing side of the range. Because even if you had already two buys positions from here, then you shouldn't be trading anymore because you were from the low of the range. So why would you take the buy at the high of the range now in the middle of the range, right? Even though it can go up, but it can go lower as well. Why? Because price already did with the buy side liquidity, so it can go lower, right? So I wouldn't be adding the positions. If you already have winning trades, then just leave it and wait for the next opportunity. Well, I would want to add something. I mean, I would love to enter the trade from even here maybe, but I'm not gonna do that because I know that price already reached the 50% of the range, and I know that price most likely will go to the high of the range. But obviously anything could happen, and as you can see that price already did sweep these equal highs and now pushing down. So I don't think that you should add any trade. The best trade will come from the high or the low of the range. Okay, this will be your best trades. Otherwise, there is some other ways to add positions, like to opposing side of the range. But you should aim for price to come to you, right? So you should wait just for price to buy at low levels, like here, or as you did right here. So I don't see the urge to look for another trade opportunity when you had an amazing trade. Like even if you closed your trade, that's fine, whatever. You are in profits. Why would you try to lose that, right? So I mean, if you wouldn't have any trade, then obviously you could look for something, from here to opposing side of the range, but you have to wait for price to sweep the sell side liquidity and then potentially look for the higher prices. But I'm trying to recover my account. No, 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 no. Don't do that. No. Then don't take any trades anymore because it's not gonna work. I mean, like you're not gonna recover in one day, right? So why would you try it? Just leave it. I mean, if you're even in a loss of your account, just lower your risk and go it slowly. I like happened to me multiple times whenever I had trading account. Then I would go in like drawdown, like 40 or maybe 30% in drawdown, and then I try to recover in 1 day, 2 days, 3 days, and I just ended up losing, you know so blowing up my accounts. Now why would you do that? Now I am asking, why did I do that? Why did I try to recover my trading? Why did I try to recover in everything in 1 day and just blew it up? I don't know. So this is the question you have to ask yourself. Like, do you really think that you're going to recover in 1 day? Because even if you have two winning trades right now, imagine you're taking one more trade right now, and you're losing all of your profits from the previous trades. Then what? Then you're gonna be upset, and you may most likely will take another trade, and then another trade, and then another trade, and you just will blow up your account. So if you say I'm trying to recover my account, then close your charts and go by your day. Then don't look for any more trades because that just not gonna work like that. Don't even think about recovering your account. Like even if you are in like in a big loss, then I would say just take out your money, save some more money, and then add as a new account and just start everything all over again like you had nothing, right? So if you had like 1,000 or 5,000, $5,000 in your account, for imagine you lost like 3,000 you lost, or even 4,000 you lost. You just take out the 1,000, save up some more, and just open the new account, okay? And then from that point, you just try to you just try to up go you know you just try to grow your account, and then you're not even thinking about your lost 5k account because you have the new one which you have to focus on. And just try to avoid the things that you did in the prior account. This is how you grow. You open one account, you lose money, you learn from it, you learn something, you learn some more thing, and then obviously you open the new one, you again lose it, but you learn something new, and this is how the cycle goes on, goes on, goes on, and eventually whenever you will eventually you will have your account which you will just grow by yourself because you're not going to do the same things you did in the last ones, right? Because if you have like you open up a new account and you do the same things as you did before, then you should stop trading, right? Or just I don't know what else I can say, because you have to avoid the things you have done prior, before. So only that way you will grow. So yeah, obviously you have to have your journal. You have to have your journal, and then you have to track your trades. Like like I do here, as you can see, I do track of all my trades. This is my win rate, this is my losses, this is my break evens, and every single trade I upload right here with all the screenshots, right here. So you just do that, and you just grow like that. Okay. So if price does break the CRT high after my session, I am simply not entering the trade because I have my session hours from 9 a.m. to 11 a.m. in the morning, New York time. So this is where I am looking for trades. Obviously, if I start the stream a little bit earlier, right, then eventually I may take a trade if price presents. But I usually go live from 9 to 11, and this is my simply working hours. Okay, so I'm not gonna take the trade even if price does the sweep CRT high after my session because I'm not gonna trade. Mm, you mean this low? I don't think so because price already expanded to the upside. I don't think that price is going to come back to this level, to be honest with you, prior to price sweeping these highs. So I wouldn't be entering at this point right now, even if price comes back to this lows before, even if price did not sweep this 30 high, because I don't think that's going to happen. So like right here, whenever this candle came back to the low, yes. Whenever this candle came to the low, yes. But whenever price already have expanded so much to the upside, then I am expecting for price to sweep the 30 high, and I'm not expecting for price to come back. Okay, so right here, yes. Right here, yes. Right here, if price comes back now, then no, because at that point the daily candle would look like a bearish one, right? So So the trading session for me is done. Like I'm not gonna take any more trades. I'm not looking for any trades because the trade I wanted, I would love to take is gone, and it happened prior to my session. So nothing I can do with that. So I just go by my day, and yeah, I will just wait for tomorrow and look if there is anything tomorrow. So tomorrow, do we have any? Yep, tomorrow we have news as well at 10 a.m. Now, let's see what we have this week. So we have a news. So this week we have a lot of news. So it will be a very volatile week. So we'll see. What about the 50 low, 52 low? Yes. What about that? What about the 52 low? Yes, it is right here. What about this low? What do you mean by that? I said, if price does come back right now to these lows, then I'm not taking any trades. I'm not looking for buys. You know, the buys are gone from here, from 50 level, right? And there is nothing there is nothing I will take anymore, because I don't think I don't think that price is even gonna come to this level down here. So so if price gets to the 94, then obviously you're looking for a clean candle like the bullish one on the 4-hour time frame, and then for price sweeping the high, from this candle right here, and then eventually you just look for you look for something to be like if price goes up, creates the high, sweeps that, then price creates after this buy side liquidity right here on the 5-minute time frame, 4-minute time frame, or 3-minute time frame. Then you either look for after price does sweep the sell side liquidity here, then you look for the order block here, and then you look for sells from this level right here, and then you look for the 50% of the range. Now this is what I'm waiting for. So I would wait for I will wait for price to go up, create a high, create a high, one more sweep the high, close back. I'm not waiting for this, because if you wait for this market structure, actually I just need to see how price does go. But if you look for the market structure shift, or you just go with the order block, because it just it's there is different variants you can enter the trade. You sometimes don't wait for the market structure shift because you have a change in the state of delivery in the form of the order block, right? So so basically you look for this. This is what you wait for. You don't wait for market structure shift here, you just wait for this change in the state of delivery as in the form of the order block, thick candle, so from here. Or you look for inversion fair value gap, which is will be from here. Or you look from the fair value gap if it has one, and this is what you wait for after price does with this level right here. Okay. Other than that, you just I don't take anything. So you just basically wait for the same thing that happened right here, because as you can see that inside here price swept the sell side liquidity and then came back, and we had an inversion fair value gap right here. This was an inversion fair value gap, and there was no market structure shift. Okay, there is not there was no a market structure shift, because the market structure shift inside here, you would look and say that it was right here, right? So right here would be the market structure shift, and from here you would enter the trade, right? But here you can see that price did create what? The order block right here on the lower time frame. You can see actually right here there was an order block, price closed above, and this was at the same time an inversion fair value gap, and this is how you enter the trade without waiting for the market structure shift. Because whenever price comes to the higher time frame key level and sweeps this sweeps this liquidity, then you don't I don't wait for market structure shift. And obviously it's because we were bullish, okay, because I was expecting for price to go up, and that's why whenever price comes to this level, I want to see how price does set up on the 4-hour time frame, for example, and then I go with that. If I wait for the market structure shift, or I just go with the change in the state of delivery in the form of order block. So so yeah, this is pretty much it from me today. And I hope you enjoyed, you found this live stream insightful, and I see you tomorrow, because yeah, I don't think I'm taking any more trades today. I mean, I'm not taking any trades today. So so thank you for watching, and I see you in the next one tomorrow, right? So yeah, this is gonna wrap it up. Uh, See you in the next one, and bye. Yeah, no problem, Fire Lord. Eh, all good. You are very lucky, because you are the first one on the stream, and you can ask the questions. Whenever there will be a much more people, there will be a very hard, to ask the questions, because there will be so many questions that I can miss. So this is why whenever you are first, you are getting much more, information, rather than people who will join later, because there will, if whenever there is a lot of people, it's hard to answer all the questions, right? So yep, I will wrap it up, and thank you for watching. Bye bye.